So our next panel is going to look at this explosive rise in corporate VC funding for quantum computing startups. And with us to lead it, we have a Q2B regular, and thank you very much for being so, Richard Waters, West Coast editor of the Financial Times. Richard.
All right, thank you very much. Nice to see you. Well, hello, nice to see everybody, and nice to see you back. Nice to be back, I must say. And glad to be able to get into the important stuff, the money side of things. You know, you come to an event like this, and I always find, I think we all find one of the most interesting things is how things change from year to year. You know, we're all looking for signs of progress, things we were expecting that have happened, or things we weren't expecting that have happened. So if you ask me, you know, what the story of quantum has been this year, apart from all the hard work you've all been doing, it's the money. It's the money that's come in. I mean, it's, you know, for quantum to get to the public markets in the way that it has, I think is a really striking moment. And I've been a financial reporter and a tech reporter for many, many years. And this is a really, you know, important moment. And obviously, continued funding kind of flooding into the private markets too. And $1 billion, you know, in the VC world these days doesn't sound so much, but that was how much went into private quantum companies in the first 9 months. That was, you know, as much as the last 3 years combined, according to PitchBook. So we all know the money is arriving, and I think it's the moment when we have to say, what are the markets? When are they coming? You know, what is this money chasing? So I hope we get some answers here. Let me quickly introduce our panelists. So I'm going to check my schedule too to make sure I get all your names and titles right. So Robert Simon. So Robert is the senior, where are we? Senior managing partner. I was going to say senior portfolio manager, senior managing partner in the deep tech fund at BDB, which is BDC, Canada's sovereign investment fund. So Robert is an industrial engineer by training. He's been a software entrepreneur and for the last 20 years a venture capitalist. So good range of perspectives. Robert,
thank you very
much. Next up, Yvonne Lutsch. Yvonne, thank you for joining us. Yvonne is an investment principal at Robert Bosch Venture Capital. She's based in Silicon Valley. But she's had a real job as well in the past. She's been in Germany in various management roles in automotive, consumer products, and she's also got a PhD in applied physics, so she doesn't know what she's talking about. Yvonne, thank you for coming to join us today. And then finally at the end, Navin Maharaj, who is a director of Koch Disruptive Technologies, part of Koch Industries. And Navin has spent 18 years in software development, IT architecture, who really understands, I think, you know, how this stuff is going to get integrated into, you know, the real IT world. So thank you all for joining us. Maybe I can start out by just asking, you know, as corporate venture capitalists, it's not just about the money. You've all got different corporate objectives here. Some of your employers, I'm sure, have their own kind of views about how quantum will change your industries. So maybe I could start out, and I'll start with you, Robert. Tell us about how quantum fits into your fund's view of the world, you know, the structure, the purpose, the timelines, because this is not normal venture investing. So why at BDC are you interested in quantum?
Thank you very much, Richard. So as Richard mentioned, BDC Capital is the sovereign venture arm for the Canadian government. We have a sole LP. So we are interested in quantum for a couple of reasons. One is we think it's a national it coincides with a couple of national research labs that we have in areas of what we consider priorities, especially for the current government. Secondly, we think that there's some opportunity to make money. So we have about $2 billion across BDC Capital allocated to a number of different areas. And we have about 200 million allocated for the deep tech fund, of which quantum is one of the focus areas. Now, having said that, quantum investing is not well suited for venture capital. It requires a lot of money. and we'll hear more about these guys that might have a lot more money. And it's long-term investment and long-term to maturity for the companies, which you all know. So as venture capitalists, we like some stuff that's easy and it's capital efficient. Quantum is neither, but we can talk more about that.
Good. Yvonne.
Yeah, I mean, Robert Bosch Venture Capital, we invest in all different kind of deep tech technologies, startups, and also new business models. And I mean, quantum computing is just interesting, or we figured out more than 2 years ago that it's an interesting space, which was pretty young that time, but we thought it's a very important and interesting bet. Bosch is probably not going to build quantum computers themselves, but discovering new materials or solving optimization, like route optimization problems on a quantum computer is very tempting. Therefore, we thought it can help Bosch at the end if this becomes successful and like if quantum computing is fulfilling the promises at some point. And then from the investment perspective, it's also an interesting play, even though it's not the very typical venture investment.
But I mean, given how early things are, at what stage does the rest of Bosch try to learn from what you're doing? What stage will they want to understand these technologies?
Yeah, so because, you know, Bosch is a German company, a Swabian company, so Swabians are pretty tight on money, so we invest pretty early. That means our typical checks is maybe $5 to $8 million US. So we invested in 2 quantum computing startups pretty early in Series A or Series B. So therefore, it's not a ton of money. The companies are early, but it makes sense to invest in the companies early and then make also the Bosch Corporation familiar with the startup over time. So they get used to that we have this portfolio company. So we don't, because you cannot force them to work with the startup, but if they are, you know, the startup is growing together with the corporation, they can getting known to each other better, and at some point they eventually probably work together. But that's not a must, because that's not a must for our investment decision.
Right. By the way, I should have asked you which quantum companies you're invested in. So, Yvonne.
Yeah, so we invested in IonQ and in Zapata Computing.
All right, and Robert.
So BDC Capital is an investor early on in D-Wave and continuing to that. And most recently, we made an investment in Xanadu. We also invested in an unannounced bosonic computing platform.
All right, good. Navin, tell us about why your fund is interested in quantum.
Sure. So first note is we're not really a fund. We actually invest off the balance sheet of Koch Industries.
Right.
In Koch Disruptive Technologies, we are the venture capital and growth equity arm of Koch Industries. We are a financial organization, though, so we're not really a strategic investor where we need to have a business sponsor to move forward on our investments. We invest strictly on the financial opportunity that's in front of us. Quantum is an interesting area for us, right? So we still are Koch Industries, and we like to be able to help out more than just deploying capital. We look for where we have strong mutual benefit, and we call that capability Koch Labs. So Koch Labs is all about bringing the best of Koch Industries to help our portfolio companies, and then how do we also pull the portfolio companies in the Koch Industries in a meaningful way to help accelerate our transformation. And quantum we see is truly a shift in paradigm, right? It is changing the way we fundamentally do compute today. And a lot of our problems are in the advanced chemistry space, the advanced material science, optimization. So a lot of what Yvonne mentioned, we deal with those same really, really hard problems. And we think quantum can truly produce a speed up for us in the near term. And it's one of those things where, you know, machine learning, artificial intelligence kind of surprised some of our companies. We weren't really prepared for it. And we think with quantum, we have to kind of start building this muscle and then this capability now. So when it does become viable with real speedups, we're ready to act on it.
So you think you specifically learned a lesson from advanced technologies that sort of suddenly hit the mainstream quicker than you were thinking.
That's exactly right. And
deep learning.
Yeah, and the first investment we've made in the quantum space is actually with QCware. You know, we think that, you know, a partnership like theirs, they can help kind of mentor us and kind of get our company ready. So when quantum hardware is available for a speed up, we can actually act on it.
Yeah. So Robert brought up this point that, you know, this is not like normal venture. Technology risk, you know, the length of the investments and so on. I mean, how do you think about those kind of parameters? What is normal venture. Is there anything in venture history that this compares to?
So I'll bring up 2 points. The thing that it might be similar to that we've seen is investing in biotech,
Right.
where you have significant time frames for technology development. You have significant technology risk, and then you have significant financing risk. You've seen in the early days biotech companies go public either before they had revenues or before they had proven out the technology. So that's one of the aspects. The other aspects that makes it different is most venture capitalists don't invest in competing companies. You usually pick a horse, and then that's the horse that you ride from start to finish. We've invested in 3 different quantum computing platforms because we don't know which one is actually going to be successful. The thing that allows us to manage that a little bit is different people, personnel, and team on each one, but also the fact that we believe that there might be in quantum sort of different horses for different courses. There may be different technologies that may be suited for specific applications. So you'll have multiple winners rather than a winner take all, which you might see in other technology areas.
So you want to spread your bets across different hardware platforms?
We have done so. Yeah. Now, having said that, we can't afford 20 different hardware platforms, so we might be stuck at 3 or something like that.
Yeah. Yvonne, how does this fit into your normal venture kind of horizons?
Yeah, I mean, on the one hand, it seems to be like very unusual because the time horizon is probably much higher, the risk is higher, but the reward potential is also higher. So it's still venture because high risk, high reward, that's what we are doing, but it's probably rather on the edge because it's very high risk and very high reward potential. On the other hand, I mean, also with all the money in the market, with the liquidity, with all the Spec exits we see, it actually feels more like a conventional venture investment because exits are becoming much more tangible.
Right.
And you all probably know that, especially in quantum computing, talent is like very scarce. There is a war of talent. So companies get probably also equi-hired. Therefore, with a tangible exit potential, it actually feels like a regular venture.
Interesting. So this point, you bring up that really important point about the rewards, not just the risks. And one of the things that really that new sectors of technology take off on is the addressable market. When the total addressable market gets to a certain size, everybody's eyes light up. Everybody comes up with a bigger TAM than the next person. But we all like to joke about the kind of the over-optimism that goes into it. But it's important. It is the thing that drives valuations. I'm not hearing a lot in quantum at the moment about TAM. Are you assessing TAMs? Is there a near-term TAM, a long-term TAM? Anything you can talk about in that regard?
It's very much crystal ball, I would say, much more crystal ball than other verticals. Yeah. But on the other hand, it's just bigger than a specific amount. And then it's like, okay, it's big enough. And the upside potential is gigantic. And it's so difficult to put in numbers because we are still in the stage where we have to understand what problems can you actually solve with a quantum computer and when.
Right.
It's just
but until you can put TAMs on it, I mean, that's an important moment for an investor, right? Even if it's a long-term TAM, to start really building valuations around.
Yeah.
So yeah. Navin, how do you look at this kind of how it fits into your model and the risk, the timing?
I think one thing that's great about not truly being a fund is we can think a little bit more long-term. And Koch Industries is a private company. So we really do have a long-term horizon, and we like to provide optionality to our portfolio companies. So if they really need the time and energy to kind of work out a hard problem, we want to be supportive of them. So our goal is to kind of lean in and help the entrepreneur kind of determine what's best for their company. And we think quantum is going to be an area where we can be helpful in that regard. So if folks need the time to kind of look forward, and once again, that Koch Lab model is we want them to come into the organization, try to identify those hard problems. What are the use cases? What are the types of problems that they can solve with quantum? We want to be that partner, for one, helping them co-develop their solution, helping them develop the right thing for the market. And then two, how do we continue to help provide capital where it's needed? So there's really not an expectation that we need to have a quick return in 1 or 2 years. The TAM doesn't need to necessarily drive that, but it's really what's going to be best beneficial for the market and for the specific entrepreneur.
What do you mean by long term?
Yeah, so long-term could mean anywhere from 5, 10, 20 years. I mean, we're really trying to think about the next wave of technology. So if quantum really will be disruptive, let's say 20 years from now, what are the right building blocks to get started today? And that's, once again, QCware was kind of a natural fit in that regard because they can help us think about the algorithms. How do we get the software right, aligned with the use cases? And then once you've kind of figured that out, what are the right hardware pieces that need to fall in place? So to Robert's point, we really think there might be a couple winners in the hardware space that it's really all going to be driven based on the algorithms that are deployed.
Yeah.
One point on that, I think it's going to be important for investors like Koch Industries and Bosch that are industrials that have strategic interests and long-term perspectives. From the financial investment, it'd be very challenging to make these sorts of investments. It's okay for $5 or $10 million, but the $200 million investments that the subsequent rounds are going to need, you have to have somebody that is going to be willing to write that check for a long-term return.
As different types of capital come in, so financial investors, VC, who even though they like to say that their timeframes are lengthening, nonetheless they are driven by more immediate demands than I think you guys.
Yeah,
and then public markets.
Yep.
Right?
Yeah.
So how's that going to affect? And I guess I'm thinking about the incentives for quantum companies, the kind of work they're doing, the pressures on them to perform, and so on. I mean, how is the type of capital coming in going to change, or what, how might it impact the way that quantum is evolving and some of these companies are evolving?
Go ahead.
Yeah.
I mean, one thing we saw is that Spec exits also caught on quantum computing. IonQ was the first company going public via a Spec. They are probably not the last.
Now, are you considering that an exit or a financing?
It's first of all a financing. That's what we know. But as an investor, after the lockup period, it can also be an exit,
okay.
Right? And it depends on whether we want to be an investor to invest in startups and to support open innovation, or do we want to have only the financial return? Then it depends on whether you stay or you don't stay after the lockup period. But the liquidity in the market and also these potential Spec exits pump a lot of money into the startups, and this changes the ecosystem a lot because now startups probably have the opportunity with the additional financing to acquire others.
Yeah.
So we probably see consolidation. We saw, when the Spec in the automotive space, like 1 year ago, became crazy with the LiDAR startups. Every LiDAR startups had to go Spec almost, and then consolidation started, so they acquire each other. I think we will see some similar things probably also on the quantum space, to see some consolidation, which is probably not too bad because this makes then the one bigger company stronger and even more knowledgeable in this particular space.
Robert, what impact do you think?
So in your comments about the acqui-hires, so that's interesting. The search for talent in this area is very, very competitive, and the talent is very sophisticated. So in the early days, I was an investor in software companies in the early days. So it used to be, $500,000 to $1 million per head on an acqui-hire. So you might see, $5 to $10 million per head on a PhD. So these acqui-hires, they might return some of the capital, and in which case then you can build a virtuous cycle of recycling funds that will then go to new startups. So that could be an interesting dynamic.
Yeah, I think in the public markets, it's going to be interesting to see what sort of revenue models these companies are going to start building. You're going to have some sort of short-term thinking, right? How do we take advantage of NISC-era machines to actually produce value back to their customers? And then how do you still have the capital to go forth and build out a truly error-corrected, more long-term machine? So I can, as I think about this from an investment standpoint, it's very much bifurcated from kind of near-term revenue models, where can we create value back to customers, and then who's actually trying to target that more long-term general device. At this point, we're having a tough time trying to, once again, it's a crystal ball, trying to figure out who's going to solve that more long-term one. I think in the near term, we're starting to see some emerging winners. But over time, we will see, I think, a much greater consolidation to help get to that ultimate state of kind of fully, general long-term.
Interesting. I was thinking when Robert before mentioned the comparison with biotech, that I thought it's a good comparison, but the difference here is I was trying to think, what is that big biotech moment where, biotech is a huge risk, If it pays off, the drug works, bingo. But with quantum, what is that big moment? And as you say, they need to find intermediate businesses in the meantime. But one thing we learned from biotech is it is huge boom and bust. I mean, is that basically what we're going to see in quantum? So it's very early days. IonQ went out at $10, up to 30, down to 20, whatever. I mean, it's a SPAC, it'll whatever. But I mean, I'm assuming we're going to see huge volatility and then boom and bust in terms of capital coming in. Is that fair?
I suspect you'll see huge volatility until the revenue models and the revenue kick in.
Right.
Because then all the valuations are just speculative.
Yeah. Well, maybe we can switch to that, and maybe I can pick up with Navin on this one, which is, what are these revenue models? What are these nearer term markets? Because I think that's what I'm noticing, this year as well, is that everybody's now focused on what are the practical applications here? When are they going to start to become available? And how big are these opportunities going to be?
Sure.
What do you see?
Until we actually have quantum hardware that's able to run commercially to produce a speed up, at this point, it's really just how do we identify the right use cases? What are the pain points that's going to be worth in the investment of resources and capital to get to that ultimate payoff? So I think in the near term, it's understanding, identifying those specific use cases within the organizations, starting to decompose them to build the right algorithms that can solve that particular pain point. And then it's training up your organization. Once again, it's getting your teams internally ready to take advantage of it. Because of the big talent crunch that quantum companies like the folks in the room here, they're grabbing anybody with a PhD, anyone has the word quantum in their title, and bringing them inside. Companies have to start building that talent pipeline internally themselves. We saw this once again in the machine learning space and data science space. There's such a drought of talent right now to get those folks into organizations. So I think getting the pipeline built out, getting folks ready for it, understanding the algorithms and the use case. So once again, when there's a near term, maybe a noisy type machine that is available for some sort of speed up in the 2 to 3, 4 year time frame, that's going to get a lot of excitement going, right? There's a true speed up, real value being created. And then thinking more long term, that's still the initial building block to get to that more broader error corrected state.
Right. Yvonne, what do you think? Where are the first markets going to be, and how significant might they be?
I mean, the short-term or near-term revenue potential is, for companies like Zapata Computing or also QCware, it's still a lot of consulting, working with corporations to figure out what problems the corporations they have. Like, is it an optimization problem? Is it like material science or whatever? And what kind of problems are actually worth to solve on a quantum computing, how to take them apart to figure out this is better to run on a classical computer, like this is rather than a machine learning problem, but this is something which can be speed up by a quantum inspired algorithms. These are coming up. We see this. And this kind of consulting and training and making the corporation familiar with a different kind of thinking, that's in the near term very important, and that's a very valuable kind of consulting business for the near term.
So there'll be meaningful revenue associated with that?
Yes, I think so.
And then when beyond the consulting side of it, when do you see other types of revenue really taking off?
For example, with Zapata Computing, they are building they built this platform called Orchestra, where you not only solve the quantum problem itself, but you have, if you have a bigger problem to solve, you have a tiny part of the algorithm which actually runs on a quantum computer, but you have bigger parts running on classical computers, and you have to orchestrate all this stuff. This has to, run in a runtime environment. This has to be. That's why the platform is called Orchestra. And this is something you can build and you can monetize as a platform as a service, as a software as a service model. And that's also a near midterm revenue potential.
Right. Robert, how about you? Where do you see? So you've obviously been investors in D-Wave. They've been around a long time.
So D-Wave has sold a couple machines. It has sold them some in the sort of the defense area, some in the material science area, some in the optimization, and Google as well. So the revenues are not yet, I would say, huge, but they're significant. And I think the move to the cloud has been helpful for everyone because it makes it more accessible. The initial projects, as we're seeing, are more than proof of concepts, but they're exploration projects. And then once hardware gets more widely deployed and once the hardware gets more capable, then you can move from the proof of concepts to actual production. If I had to guess, I don't know, Navin, you tell me when we're going to get production level.
Great question.
But in the meantime, you gotta pay for lunch, and
Right.
these proof of concepts will certainly cover the expenses.
Yeah.
So that's good.
All right. Well, one question that always occurs to me, with this is like, how do you best play this opportunity as an investor? So people always make the comparison with mainframe computing in the very early days, and obviously it was all about vertically integrated systems. Somebody made the chip, and then over time built the stack, and then hey, software was born. But this all took a very long time, and investment was in kind of the core systems companies. And in many ways, that's what I guess the conversation. I mean, a lot of it is about the hardware platforms. But then I wonder how quickly an ecosystem develops around this, and what the other opportunities are. I think Will Oliver earlier on showed a slide of all the control systems and control aspects, which is a kind of huge area of activity. Obviously, software, on top. So as an investor, how do you look at this as the bigger opportunity around quantum? And will we see kind of these horizontal layers and specialist opportunities throughout the stack, as it were, or is it all about these big kind of systems type companies for a while? Let's start at the end.
I think the machines will all be consumed via the cloud, right? So I think going back to that point, we work with Amazon Web Services quite a bit. They're a strategic partner of ours. Koch Industries has been moving to the cloud over the last 5-6 years, and it is such an enabler for our transformation. And we think that's going to be the way quantum is enabled as well. So for us, we think software is going to be that differentiated layer. The hardware is going to be provided by someone. Amazon will build some sort of connector back into them via the bracket or some other solution that they'll announce here probably fairly soon. And then we want to build our differentiated software on top of that, right? So once again, it all goes back to the outcome for the customers. For us, it's a speed up in optimization problems, material science, advanced chemistry. We want to kind of work backwards from those sorts of pain points to build the right algorithm, build the right software that then take advantage of the machines. And hopefully the machine, quantum hardware manufacturers are working with the software development shops to kind of custom build the right device that aligns with those pain points.
Fascinating, yeah. Yvonne?
I mean, we've decided that several parts of the quantum computing space are investable spaces, like whether it's the hardware, whether it's the software, or like the control layer, which is also an important one, where we have not made an investment, but it's also something. And I mean, as a startup, you have to focus on something. You cannot, I think, as a startup, build the whole vertical thing because it's just too much. You have to focus. And therefore, I think it's good for us as investors because then there are several spaces where you can invest. I mean, I agree with Navin. Software is a very, very important space. That's also why we made one investment in that space so far. But the hardware will also play an important role. A very important role. Even though it's provided through the cloud, it's still investable.
Mm-hmm. From our perspective, we've made 3 investments in quantum computing platforms. That's probably enough for now. They're probably distinct. Now, the another way to play it, and which we'll probably look at, is instead of picking one of those horses as a winner, try to sell picks and shovels to the other folks that doesn't matter which of those technologies wins, and that might be at the software layer, or it might be something else. It might be selling cryogenic systems or something like that, so that you don't have to get smart or lucky to pick the right platform. One or more of the platforms are going to be successful, and if any one of them is successful, then you get to be successful.
Yeah.
Do you think that picks and shovels opportunity is there yet? Are there
I think so. Sure. Yeah.
Good. All right. Well, we're not going to keep you from your lunch any longer. That was a fascinating discussion. Thank you all very much. I've learned a lot, and I hope you have too. Next year, when we get back here, I'm sure we'll have a whole bunch of public companies. You'll all have had a lot of great exits. So do come back and see us then, and thank you all.
Thank you,
Richard.
Thank you, sir.
Discussion.